welcome to ET Inside, where we get you a 360-degree view of the big picture in business and economy. I'm Srinu Ramakrishnan, and here's what we have for you on the show today. As the food inflation monster eats into your monthly budget, the focus is on supply chain and retail. Big retailers say foreign investment could hold the key. Are they right? With the entry of Walmarts and Carrefours looking inevitable, mom and pop stores are coming up with their own strategies for survival. And how a better supply chain can lower costs at retail stores. Our top story first, $260 billion by 2020. That, according to consulting firm BCG, is the true potential of organized retail in this country. But for that to happen, retailers have to scale up significantly and make some serious investment in back-end and know-how. But so far, foreign money has been a bad word in multi-brand retail. But now with inflation soaring, the clamor within the industry for FDI is getting louder. Lakshmi Subramanian gets you the story.
A few weeks ago, the stage was set for the opposition to be heard loud and clear. Food inflation was at an all-time high of 18%, and the government was already dealing with two big corruption scams.
The recent spurt in prices has been driven by an increase in the prices of vegetables, fruits, milk, meat, eggs and fish. This poses a very different kind of problem as these commodities are not held in public stocks.
Price rise is always, particularly of the essential commodities and food prices, are a matter of great concern. Therefore, efforts are being made both from the demand side and the supply side to ensure that the prices are moderated.
Those efforts have paid off, and inflation is now at a 7-week low. But at the micro level, not much has changed. Intermediaries are still calling the shots as far as the prices of staples, fruits and vegetables are concerned. Take for instance the case of tomatoes. According to BCG study, the farmer gets about 30% of the consumer price, and here's how the costs pile up at each stage in the value chain. The aggregator adds 14%, the market trader 5%, the wholesaler 18%, the sub-wholesaler about 12% and the retailer about 21%. Just 54 paise of every rupee spent by the consumer on tomatoes is accounted for by farmer realization and value adds. The rest of it is divided by profits and leakages at all levels in the value chain. That explains why organized retailers in India say they are plagued with supply chain inefficiencies.
The supply chain cost worldwide, I think people have been able to achieve a cost of around 1 to 1.5% of their total sales. I think in India we are still at around close to 2.5 to 3%. So there is a scope of making that work in a much better way.
Indeed there is, but then retailers need large amounts of capital to upgrade their supply chains and technology. But most retailers don't have access to capital because of lack of collaterals and fixed assets. And so strategic investors play a big role.
Retail is a big capital investment industry. It requires capital, and most of the Indian retailers or the companies which are there do not have the balance sheet strength or the ability to scale it up.
And that's why the need for FDI. So what can FDI in multi-brand retail help achieve?
In retailing, we don't manufacture anything. We actually only sell what others produce to our customers, and we try and do it in the most efficient and cost-effective manner. So when you do that, you engage a lot of suppliers, people, associates who work in your stores, and therefore I think FDI and retail can only accelerate and make it more efficient to have more inclusive growth in our country.
Currently, India permits 100% FDI in cold storage, 51% FDI in single brand retailing and 100% FDI in cash and carry wholesale trading. FDI in multi-brand retailing is not permitted.
I think what foreign retailers are not willing to do is to actually separate the back end from the front end, because different retailers have different business models. It is not even very clear as to what exactly is back end, what exactly is front end. And it is that soft factor of running a risk of understanding, what really would they be investing in, that is preventing FDI in back-end investments. By combining the two, there will be a significant impetus on investments in both front end and back end.
The government understands that and has been hinting at wanting to open up the sector. The reason why multi-brand retail is more important than the other two categories is because it accounts for most of the $28 billion organized retail market. But FDI in multi-brand retail has always met with severe opposition because it is feared that opening up the sector could lead to a heavy loss in livelihoods in the unorganized sector. According to the NSSO, in 2007, retail trade employed 7.2% of all of India's workers and provided job opportunities to 33.1 million people. But retailers don't buy the job loss argument.
Once these players come here and are part of the Indian economic system, as has been seen in many parts where they've gone, for example, like China, the kind of reverse sourcing that happens, mainly sourced from small-scale manufacturers here, that goes up many-fold, and it goes back into their, their system, their network internationally. So huge boost, I think, to producers of Indian goods and services.
Small-scale manufacturers or medium-scale get access to the market through the modern retail outlets. You have the lesser fortunate people of India, particularly the large section of unemployed youth who have done their 10th and 12th standard, who actually get a great opportunity to take a crack at the employment market. So we expect almost 4 to 6 million direct jobs and about 5 to 6 million indirect jobs being created over the next 10 years as a result of modern retail.
Consulting firm BCG says that if India realizes its true retail potential, organized retail could well land up contributing to 4.5% of its GDP versus just 1.76 currently, and have a market penetration of close to 21% versus the current 6 to 7%. BCG says that could help producers earn $35 to $45 billion a year and help them with 10 to 30% better realizations. By then, the sector could create 3 to 4 million direct jobs and 4 to 6 million indirect jobs, which will mean an additional income of $14 to $16 billion a year, and consumers will be able to save $25 to $30 billion a year with 5 to 10% savings across categories. But that is possible only and only if investments are scaled up and technological know-how is improved. And so it is important now more than ever before to push for FDI in multi-brand retail.
Indeed it is, but what does it mean for India's 12 million kirana stores? That and more is coming up after this short break. Stay with us.